What is up? What is up, Zinger Nation? Hope you guys are ready for some options. Brad, how we doing?
My friend Aaron, I'm doing great. How are you?
I'm good. I'm good. I cannot complain. I think SPY closed at all-time highs. So
E-
whoopee.
Every day it's at an all-time high, it seems like.
I know. I wish my portfolio would do the same.
It's a very strange market. I will just say that, and I'm sure many agree with that, but it's just a very, very just odd.
Right. All right, Brad. Well, I'm going to let you take it away. Let me know if you need anything.
Appreciate it, man. Good evening, everybody. My name is Brad. Thank you for tuning in. We are technically options. Technically options title because we talk a lot about technical analysis. We talk about um, how to trade options from the perspective of including technical analysis into your trading. And we talk to, many people in the chat to kind of get a little bit better of an idea of what we can help you with when it comes to options trading. So if you are new to the platform, feel free to drop a question in the comments or during the live chat. I've got the live chat up. Aaron's got the live chat up as well. We will try to get to all of your questions. If I don't get to it right away, I'll circle back around or anything like that. But please feel free to drop a ticker in the chat. Feel free to ask a question. We're very interactive. We try to help you out as much as we can during our hour that we have. We're live every Thursday night at 5 p.m. Eastern, and we look forward to helping you become a more successful options trader. Tonight, we will be discussing, we're going to start talking about the Greeks. And if you are not familiar with what the Greeks are what underneath options contracts, the Greeks are what drive the actual options pricing, and they drive the actual options movements. The thing we will start with tonight, okay? I have a lot of people that ask me, okay, so let me just kind of lay a foundation of what we'll talk about. So basically, when you buy a call, when you go long on a call for an underlying stock, you are saying that that stock is going to go up. So you buy a premium, that's $1. If you are, if you're long on a stock, you want that stock to go up. Same thing with an option. If you are buying a call, you are looking to flip that premium more. You are looking to pay a low cost for an option contract and then sell it back for a higher amount. However, there are times that you can guess the right direction of the stock, and the option contract doesn't necessarily go up by a lot. Sometimes it doesn't go up at all. And a lot of times I get people that ask me, I bought a so-and-so call and I paid $1.25 for it, and the stock was at X amount of dollars. And then a couple of days later, the stock doubled or the stock went up by 15% or whatever it is. My option moved like 5 cents. Like, why is that? I thought all I had to do was guess the right direction. And yeah, it's important. You obviously have to be on the right side of where the stock is going to go. However, there is a lot more underneath when it comes to options trading. We are concerned about, yes, we want to get the direction right. You obviously, if you don't get the direction right, it doesn't matter what the Greeks are. You're not going to get you're not going to get it right regardless. But you've got to understand that there's a lot of other things that go on underneath an options contract. You're not just trying to buy a call, stock goes up, your option contract automatically goes up as well. There are a couple other things that we want to talk about. And with our show here on Benzinga, we are, I try to be more foundational when it comes to options trading. I try to be more of, I like to be, I don't want to say just very basic, because we talk about, obviously, Greeks are more advanced when it comes to options trading and things like that. But I try to lay a foundation that everyone can use. I'm very big on trying to help people understand that options trading does not necessarily have to be scary. A lot of times people, when I talk to them, I am a full-time options trader. I trade 99.999% options. I was just talking to my wife the other day. I don't even remember the last time that I traded, like an actual common share. I trade options, like I'm a full-time options trader. And when people hear me say that, they often think that I there's this misconception about options trading that so many people are um, they're afraid of options trading because they think that they're going to get involved into a trade and it's going to go against them and they're going to blow up their entire account. And there is a sense of which you need to approach options trading with you have to be careful. Of course, you can lose a lot of money. But you have to be realistic when you approach options trading because most people get involved into options. We call them the YOLO plays. They buy a real cheap out of the money call and something happens that causes the stock to go up and that option contract just runs like crazy. We saw it with GameStop. We saw it with AMC. We've saw it with many MVIS, for example, that you just reported earnings today. We've seen many of these stocks that the internet grabs a hold of, and it just causes the stock to go up really high. And then that contract subsequently runs as well, and you've turned your $5 into 5,000. It's that is the reality of what people think on the internet about options trading. They think you're going to turn $5 into 5,000. You're not going to have to work hard. Listen, that's not it at all. For the most part, options trading can bring you steady income. It can bring you good gains. It can help you to grow your portfolio, but we have to approach it carefully. We have to understand what we're doing when we're buying option contracts. We have to understand that, listen, like you're not just trying to buy a contract low and then sell it high and it's going to run if the stock goes up. Yeah, again, that's a big part of it, but there's a lot of other things that go on behind the scenes with options contracts, and that's what we're going to talk about tonight. So the first thing that I want to understand, or what you guys understand, is that, listen, you have to get the direction right. Absolutely. If you are long on a call, you want the stock to go up. If you are on the opposite side, if you're playing a put, you want the stock to go down. However, there's a couple other things that are underneath the surface of options trading. There's these things that are called the Greeks, okay? And the Greeks are basically the analytical tools of how you can predict or how you can better succeed as an options trader. The one that I want to talk about tonight specifically, and we'll see how far we get into the show, we want to talk about delta. Okay, now delta is the rate at which the option changes whenever the stock goes up by $1. So let's pick a Tesla call, for example. I was on SPY. Let's go to Tesla. All right, so we're gonna play tomorrow. Let's go a little farther out. Let's go May 7th. Let's go next Friday. Tesla is at 675.50 right now, and let's go down to where they're in the money at. So right now, the 675 call is where the in the money line is drawn. So with a 675 call, you would play $2,130 for a contract, and 2.3 thousand people bought, or there was 2.3 thousand contracts sold today. It's a very large amount. But on this one, let me show you what it is here. So I use Tastyworks, and not sponsored by Tastyworks. I really like their platform. I think for somebody who is a primary options trader, I think Tasty I think they're the best. Again, I'm not sponsored by them. I really like the platform. I don't do my charting through Tastyworks. However, I do all of my ordering and my options work through Tastyworks. I think they're the best for options trading primarily. So what you'll see down here is the 675 strike price is going for $2,130. Remember, you have to times it by 100 because each of these contracts represents 100 shares of the underlying stock. The delta, jump down here, is 51.87. Okay. So now the delta, what that is, this number is very important right here. This number is representing how much your contract is going to go up based upon a dollar movement in the stock. So if Tesla is at 675.35 right now, and if it goes up to 676.35, if it moves up by $1, this contract right here should move by 51 cents. Okay. Now, it's okay to understand, like, I have a lot of people that think like, okay, well, if the stock goes up by $1, the contract's going to go up by $1. I have a lot of people that just don't understand like how the option contracts move. And listen, let's just put all of, let's just start from a foundational perspective of what it means to trade options. And to understand that, like, listen, like, just because the stock goes up by X amount of dollars does not necessarily guarantee that the contract that you're holding is also going to be going up by that amount as well. Because that's not necessarily what happens. The first thing we have to understand is the delta of a call. So when you are buying, and this again is in the money, this is a contract that is, if you were to exercise it right now, you would be considered in the money. There's also at the money, which is normally like 1 or 2 steps down. And then there's out of the money calls, which are way far out, typically have very little chance of being in the money. But what we'll see here in a moment is the delta on those is way, way much lower. The delta on an in the money call for Tesla is 51.87. Okay, so that means that for every $1 that Tesla goes up, this contract has the potential to go up by 51 cents. Now, again, there's some other things that go into this, but just at its very simplest explanation of what delta means, it is going up by 51 cents. Okay, so that gives you a little bit of an idea of when you are playing a call, what you can expect in order for your profit to be if you are somebody like me. I am playing options. I just play options to flip for premium. I don't exercise contracts. I don't. I have no interest in owning the shares. I am playing contracts just to buy for low and sell at a higher premium. That's it. I'm not concerned about buying the shares. I'm not concerned about exercising the contracts to get the shares. I don't care about that. Somebody said, does Tastyworks charge commission per options contract? They charge a flat fee. So you are, that's another thing you have to remember too with your brokerage. Depending on who you use, your brokerage is charging you a fee for options trading. Some is like 65 cents per contract, open and close. Some is $1 one-sided. That's what Tastyworks is. Some are, I mean, even more than that. Keep that in mind when you are trading options, that you are also having to recover the commission that you're paying for the options contract itself. So, let's just say, for example, if you're on Tasty, Tasty charges $1 one side. That means they only charge you to open the contracts. They don't charge you to close the contract. So let's say you buy 10 contracts. It's $10. That's an additional amount of money that you need to recover on your profit and loss side. Depending on your brokerage, again, everybody's different. Find out from them what they're charging you, and then you need to factor that into your costs, because a lot of times people are saying, well, I sold a contract for X amount of dollars, but when I saw my profit and loss, it was a little bit different. Why was it lower than what I thought it was going to be? Well, we have to remember that when you are selling contracts, you are being charged, typically, depending on your brokerage again, you are typically being charged a fee, a commission, in order to close that contract out. So whatever platform you use, if it's TDA, if it's Schwab, if it's Fidelity, if it's Tastyworks, if it's Webull, Robinhood, whoever it is, find out what your options contract commission is. Then you factor that in, because if you are being charged 65 cents, I believe Schwab is 65 cents per contract. And that's on both sides. That's to open and to close. So if you are charged 65 cents per contract and you open 10 contracts, that's an additional $6.50 that you're paying on each side. That's $13. You have to factor that in as well when you're trying to take profits and things like that. Depending on your brokerage, again, everybody is different. I am, I'm lucky that so I think we talked about it last week, was it? Once you get to the point to where you're trading a lot of options, you know what it was? I think we talked about it during the small tech, the clean tech conference. We discussed that once you get to a certain level of trading, you might be able to call your broker and say, listen, I'm trading X amount of dollars per month in options. Can you sort of work out some sort of deal for me to maybe give me a flat fee or to get me a little bit lower of a price? Because commissions, they really can eat up into the profit that you're trying to take. I mean, you can have a winning trade if you're just trying to get out of it real quick before it goes really bad. I mean, you could end up losing money on the trade because of the options commission fees. Just keep that in mind. Okay. So as we were discussing, an options contract, it is going to go up based upon a couple of these underlying Greeks. The first one we're talking about is what's called the delta. And on an in the money Tesla call, This 675 is 51.87. That means it's going up by 51 cents for every dollar that Tesla goes up. Now, you're probably looking at this when you're going, I don't have $2,130 to buy a options contract for Tesla. That's perfectly fine. Not a lot of people do. Let's take a look at one of the ones that is very popular. Now, with Tesla, you can always go to the even numbers, the 800s, the 900s, the 700s. And you can see that the volume is very high on those calls because they're just, first off, even numbers are they're like a psychological support and resistance level. They don't always necessarily, according to like volume and supply and demand, represent a actual support or resistance level. However, when I'm training people and I'm teaching them about taking stop losses or profit targets and things like that, I'm always telling them not to set your stop loss on one of these even numbers because those are so commonly just smacked that if you are set on a 700 or an 800 or one of these even numbers, you are really they call them stop loss hunts, where an order will just come through and it'll just wipe a bunch of these stop losses up because you set it on an even number. So I tell people to set it for like a couple of dollars off of that. That'll help you out with your if your stop loss is triggered and you're always wondering like I feel like a candle went down and touched the 700 and then it spiked back up. Well, that's because these even numbers, I'm not going to get into, like a big discussion about like stop loss hunting and stuff like that. I always tell people not to set your stop loss on an even number. Set it up for a dollar or two off of that. Just give that a try. But anyways, so let's look at the $800 Tesla call. Now, the $800 Tesla call right now is 50 cents. So it'd be $50. Tesla closed at 675. It's at 675.79 right now after hours. There was 6.07 thousand volume on this contract today. Now remember, option contracts only trade during regular market hours. There's no after hours. There's no pre-market. So these numbers are just for 9:30 to 4. So with this Tesla contract, look down here. You can see the delta. The delta is 2.36. Now, that's tough, okay? You are basically, this is when you get into these. Now, I don't want to get ahead of myself when we talk about some other things because the delta can change. Like once these 800 calls get a little bit more, once they're closer to being in the money, the delta is going to go up, okay? But from a perspective of where should you invest your money right now, when you look at the $800 call and you see that it's a delta of 2.36, that's not really good. I mean that's you're basically, I mean, I hate to call them YOLO plays because there's 6,000 contracts sold, but in the grand scheme of things, it's Thursday the 29th of April. Tomorrow's the last day of the month. This contract expires next Friday. So Tesla would have to go up by $125 plus your contract fees, plus your premiums in order for this to be considered in the money. That's why this delta is so low, because it's got, and if you look over also here, you see this pop percentage right here. That is a pop percentage of 2%. That means it's got a 2% chance of actually being in the money. You can also look at delta as the chance that it's going to be in the money. You have this delta right here. There's a 2.36. So that basically means there's a 2% chance of this call being in the money. Now, if we go back up to the other one that we were looking at the first in the money call. This one's got a 51% chance of being in the money. It's got a 51% chance of it actually like making you the end goal of what you're trying to do with options contracts, and that's to flip for a higher premium. Now, so you're probably thinking right now, let's kind of take a pause and let's evaluate this from the perspective of like, why does it matter? Like why can't I just buy a contract for $1 and then sell it back for $2? Okay. So this contract here, this 675 call, has a delta of 51.82. It also has this huge theta right here. Let me actually show you one other one real quick. Let's look at tomorrow's expiration. See the theta right here? The theta is 158. the call as it is closer to expiration, you have what's called theta. Theta is a time decay of the options contract. I try to get people to understand this as well. When you buy a contract, and if that stock is flat, if it does not go up, if you're on a call, if it does not go down, if you're on a put, that contract automatically is losing money overnight. Okay, so if you buy a call on a Thursday afternoon, let's say for example today, you bought the 675 Tesla call, you bought it for X amount of dollars, and then Tesla trades sideways all overnight and into the pre-morning hours, and then at 9:30 it opens and your contract is now cut in half. And you think, well, why did that happen? My stock didn't go down. It didn't, there was nothing major that happened to the stock. So why did I lose so much money on my contract? Well, it's because you have what's called theta. Theta is the time decay. It's the rate at which the option goes against you. And it is your worst enemy when you are buying contracts. When you are selling contracts, and we won't get into that tonight, we have that planned for the next couple of weeks. When you are selling contracts, theta becomes like your best friend. You want that option to get as close to expiration, if not expiring, out of the money. You want that theta to eat away. You want it to be high. You want that contract to rapidly decay. When you're buying, you don't. Because again, you're not only having to get the direction right, you are having to factor in all these underlying Greeks that are going on with the stock as well. And remembering that theta is your worst enemy, it will help you to understand. It will help you to understand why a contract is not necessarily going up when a stock goes up. Okay. Now, the underlying Greeks, the underlying numbers of what the contracts are explaining to you will help you. Again, help. They're not going to guarantee anything because you've still got to work it. Like that's why I'm big into technical analysis, because you still need to figure out, okay, like what is this stock doing? Is it in a is it in an uptrend? Is it at a support and resistance level? Is it above a moving average? Is there volume behind it? You can't necessarily just look at the Greeks and play only the Greeks and then guarantee yourself profits. You've got to understand too that there is a sense of analyzing the charts, to take a step back and look at the chart from a perspective of. I say that because not a lot of people do that when it comes to options trading. With options trading, they just want to look at buying a call cheap and selling it at a higher premium. And ultimately, it's not just as simple as that. You have to factor in, okay, so if a delta of 51, now let me show you one other one. Let's take a little step back. Even going, let's say, from the in the money 675 call, let's actually go back to May 7th. Okay, so the 675 call from May 7th is a delta of 51.95. Let's go 3 strikes down. Let's go to 682.50. The delta you can see is 45.94. Okay, so as you are farther away from an in the money call, you are noticing that your delta is going down lower. Let me show you one other, just kind of give you an understanding of how, let's go down to, let me see here. So the 850 call looks like that was the highest volume out of the money. The 850 call, there was 1.2 thousand contracts sold, 21 cents, has a delta of 0.97, okay? But also notice this theta. This theta is negative 9.2. Now, if you remember back up here, the theta on this one was negative 108. So with this call, this one that's in the money, you have the two things that are fighting against each other. The Greeks are actually working against each other because the theta is actively decaying your. Did my camera freeze? My camera did freeze. Hold on, I'll be back in 1 second, guys. Let me fix this real quick. Nope, still froze. If you guys can hear me, just drop like a number 1 in the chat. I'm gonna try to fix my camera real quick. Let's do this. All right, so you guys can still hear me, at least. That's good.
What is up, team? Brad, you with us?
Yeah, I can hear you now. Can you hear me?
Oh, I can hear you. All right. I think we just had a quick glitch
Yep.
in the system, but we're good now.
Okay, sorry about that.
Oh, wait. Can can you hear me?
I can hear you. Can you hear me?
I can't hear you right now. Yeah, well, the higher ups are telling me this. Oh,
Do we have Brad?
I'm here. Can you hear me?
Yeah, I hear you. Do we have
wait.
Aaron?
Oh, I can't hear anything.
Everybody says okay. So everybody in the chat saying you can hear both.
Oh man, Aaron, AB, get out! What are you doing, man? Get out of here! All right, Brad, back to what you're doing.
Back to work.
apologize.
Okay.
Back to work. AB, get out.
All right. Sorry about that, guys. Okay, everybody can hear everybody. The whole crew is here. Let's go. All right. So back to what we were saying about the delta and the theta. So the delta is what's showing you how quickly your option contract is going to move. The theta is showing you how quickly your option is going to decay. So again, both of those numbers are important. Both of those numbers need to be factored in when you are playing options. You can't rely on one or the other, okay? Both of those numbers need to be important to you. You need to understand that one, the delta is the rate at which your option will go up. But then number two, the theta is the rate at which your option will go down. Now, again, you have to remember that if you are long, if you are buying a call, the rate at which it decays is your enemy. The opposite is true if you are buying a put. But if you are selling an option contract, whether it be a call or a put, theta is on your side. You are looking for that option to decay and the option to expire worthless because you have sold, you've gone short. You want that option to expire. Now, with I know that this is tough. Okay, let's just take a real quick pause and let's evaluate this from the perspective of, okay, I'm not a full-time trader. I'm just looking to get into options. Somebody said, what's the premium, theta, and delta numbers for a call option that's over a year? All right, so let's go to, we won't look at Tesla. Let's look at SPY calls. Let's go out to what's called a leap. A leap is an option that is way, way, way far from expiration. Let's go to January 21 of 2022. Let's look at now this is interesting here. The 430, and as you can see, the premiums are much more expensive on these calls that are way far out. And the reason that they're so much more is because they're so far out. This is 267 days away from expiration. So the 430 call, let's look at that. See this delta here, 45.51. So again, that's just about 50 cents. So for every dollar that SPY moves, the contract is going to go up by just about 50 cents. Okay. Now, there's also some other things that go on with this, but again, just in the simplest of sense, okay? That's what is going to drive the option contract. Now, let me show you what a SPY contract for next week looks like. Let's go to May 7th. That's next Friday. Almost the same, right? 48.75. But look at the theta. See the theta right there? Negative 15. Let's go back to that January one. January 21. 420. Negative 4. Okay. So that's another thing to keep in mind. The theta is, again, enemy number one. Okay. You need to have the option contract. That's why, like, when people say, let's go, somebody drop a ticker in the chat that is, that we're going to look at it. We'll move on from Tesla and SPY. I want to show you some other ones that, let me pull up MVIS while we're looking at that. So MVIS, let's go to May 21, and let's go to a way out of the money $42 strike. Somebody said Amazon, Snow, Apple, DraftKings. Everybody's dropping stuff now. Okay, I'll swing back around to one of these here in 1 second. Let's look at a way out of the money MVIS call. As you know, MVIS was the latest and greatest stock that Wall Street Bets was playing. They were, everybody got a hold of this stock, and they tried to get it to go because there was short interest on it, and they wanted to squeeze. And at one point, almost all the options were in the money, and so then that was possibly going to cause a gamma squeeze, like with GameStop. So this became the popular stock. And if you are following this right now, it is now down to $15.36. It's down $3, and the end is not in sight yet. The earnings were expected to be, again, that's another thing you have to remember too. That, like, okay, we're in a weird situation with the market. Stock are not always responding to the earnings reports. But with a stock like MVIS, you have to be realistic with this, okay? This has been a stock that's been popular on social media and the internet for a long time. There's these rumors about Microsoft. There's these rumors about the HoloLens. There's all this stuff. That's why you hear this saying, buy the rumor, sell the news. You don't want to be involved in a stock like MVIS come earnings time. I'm sorry, they are not going to exceed any sort of earnings that's going to cause this stock to go up. Again, we've all been there. Believe me. If I had the time, I would pull up all of my old statements and I would show you the bad decisions that I've made on stocks. I am not trying to say that I've had a perfect run. Listen, I am currently, as of today, my buddy that I talk to on a daily basis, I'm currently struggling with trades that I made last week because I made bad trades. I certainly do not make perfect trades all the time. I made bad trades last week. I made bad trades last year. It happens. But what happens also when you're growing as a trader is realizing that MVIS was simply a pump. You are just riding this stock up, and you are getting out with your 20, 30, 40% profit. You need to realize that, listen, you are going to catch a runner. You're going to catch a stock that you got in real low, and it shot to the moon, and you had 150%, a 200% gain, or whatever the number is. It's going to happen, okay? And then what also is going to happen is, now because you had that happen one time, your expectations on what that stock is going to do, you are always having in the back of your head, well, that one time I was involved in a stock, it ran. And so that means every other stock in the history of stocks is going to do the same thing. It's not necessarily true. That's why, I'm a big technical analysis guy. I am I am that's what I focus on. I focus on technical analysis. I focus on the Greeks. I focus on that stuff. But in the back of my head, I am also looking at what's going on with this stock from a company perspective. MVIS, I mean, they had their earnings were real low. Like it was bad. Like it was and it was expected to be bad. That's the thing. Like nobody was shocked that MVIS is not a multi-billion-dollar company. But what you have to remember, you've got to be out way before that. Like you should not have an MVIS option like through their earnings call. Like if you were going to play an MVIS option, you would have played puts. You would have played the other side expecting that the stock is going to respond to the earnings in a way that stocks respond to bad earnings, that it's going to go down. Look at this call, okay? So the $42 strike for May 21st, 22 days away. People are expecting MVIS to be at $42. 2.49 thousand contracts were sold. The delta was 14.5. That means for every dollar that MVIS was going to go, the stock would follow 14 cents, or the contract would follow 14 cents. Now, more importantly than that, ask yourself, in the grand scheme of the stock universe, where do you find MVIS being $42 in the next 22 days? Just like take 1 second and think about that. Okay? It's not going to happen. It's not going to happen, okay? So don't set yourself up for disaster when you are getting into a contract the day of an earnings report that for everybody online that is telling you is going to not be good. Like you've got to allow that stuff to weigh more on you than, well, man, if I buy at 60 cents and this in the money call is 980, I mean, that's a 900,000% gain. I mean, that's really, the chances of that happening are so low. That's why, as I was saying before, okay, that's why so many people blow up their accounts playing options, okay? Listen, I love buying out of the money calls. I love it. I just do. I like finding that little diamond in the rough, buying a contract for 50 cents, buying a contract for $1, anything like that, okay? I like doing that. However, that's not my strategy when it comes to being a successful options trader, okay? You are not going to become a successful options trader trading way out of the money cheap calls. You're not going to, okay? Say that again. You are not going to become a successful options trader by trading way out of the money cheap calls. It's not going to happen, okay? And that's not me trying to be a Debbie Downer. That is me telling you that in order for this contract right here, okay, this $42 strike price MVIS call, in order for that to make you money, that's why you need to learn Greeks. That's why you need to learn the underlying numbers when it comes to options trading. Because when you go into a call like this, now listen, let's look at it from the, let's say, for example, you wanted to buy the $42 strike price, okay? And you said, I don't care. There was 2.49 thousand contracts sold. That obviously means more than me, some random guy talking on the internet, explaining to you how to trade options. Okay, I get it. I play the volume on contracts a lot as well. You need to buy more than one. okay, to give yourself a chance to make any sort of dollars on this way out of the money contract, don't expect to buy one contract and that stock run and run and run, and that contract run and run and run. Because look at this, okay? So you're at the $42 strike. The $22 strike, 20 strikes away, $22 of strike position away is $2.35. Difference between that, I mean, that's not like life-changing money, okay? That's not like you're not going to retire off of a $70 MVIS, like way out of the money call. Like just for a moment, look at the options chain and see the price range. See where the volume is. This volume on the $15 strike, 490, 1.3 thousand. That's pretty good. But the delta is 76. Somebody said, when do I sell my options? Up a certain percent. I do scalping of options. So I am I'm buying handfuls of contracts at a time, and I am flipping for a goal of 30%. 10, 20, 30% multiple times a day is my goal. That is my that's my strategy. That's what I try to stick to. 10, 20, 30%. But again, I am trading, you know, a lot of contracts per day. I am trading somebody asked me what I thought about harmonic patterns, the Gartley pattern and the cipher pattern. I honestly don't even know if those are real things. I've never heard of those terms before. And I don't mean to say that like you're like trying to joke around with me. I'm just saying I don't even know what those words are. I use an EMA strategy. I don't get into harmonic patterns. I use an EMA cross when the 8-day EMA crosses up to 21 as an entry signal for me. I also use a volume profile to show me where support and resistance are. I also show a relative strength line for the stock compared to the S&P. Those are my strategies. I don't really get much. I'm big into support and resistance. I'm big into charting. I'm big into levels and things like that. I'm not, you know, I'm not like an Elliott wave. I'm not like a, you know, I don't do anything like that. I think that, you know, if that works for you, that's great. Cause again, I'm a big person that like my strategy is not the perfect strategy. I'm not going to try to sell you based upon my strategy alone. Everybody's got their own strategy that works. If that works for you, hey, that's great. That works for you. I'm trying to find a balance between, trying to find a balance between all of these things that go on with options trading. Somebody said it works for you. Exactly. It works for me. That's the thing. That strategy has listen, I've done testing, I've changed, I've added, I've taken away. There's a lot of things that I am or that I have done in order to arrive at where I am at today as a trader. So again, like if that's what works for you, you've got to confirm that it works though. Like you've got to do back testing and things like that to make sure that the, you know, what you're using as entry and exit signals are in fact, you know, profitable. You know, somebody says as long as the strategy works, it's a good strategy. You're exactly right. I've got a quote on my dry erase board. It says it only takes one strategy to make a living. And that's true. Like you don't have to know every single strategy that there is to trade. You don't need to have 20 different strategies when it comes to trading options or when it comes to trading commons. You've just got to find that one that works for you and know it like the back of your hand and know it in and out and be confident in it and understand that this is my strategy. This is what I am using in order to enter and exit. Like that's what you need. You only need one strategy to make a living. So let's kind of circle back around here. Okay. So with options trading, you've got so many different things are going on. You've got theta, you've got gamma, you've got delta, you've got technical analysis, you've got price action, you've got volume, you've got open interest. And those were two things that we didn't even talk about was volume and open interest. Those are important as well. I'm a big, somebody said, do I scalp buying or selling? I scalp buying. I buy contracts and I am selling them quickly for a range of around 30% profit. That's my goal. And I'm buying multiple contracts. I'm in and out rather quickly. I play weekly contracts. I play the big guys, the big hitters, the Teslas, the spies. Somebody said you cannot get Brad to take a put. It won't happen ever. He refuses. Listen, I am. I don't know why. Like, I just don't play the other side. Like, and you guys are thinking, well, you've got to be able to play both sides. And like, I get it, man. I absolutely get it. Like, but I just don't do puts. I just don't do them. Like, I don't know what it is, but it just looks foreign to me. I just I don't know. That's made my night. That's very funny. I will not ever play puts. I don't even know. Let me think here for a second. I almost bought an MVIS put tonight. I almost bought I almost bought MVIS puts. I really did. And I couldn't get filled at the entry that I wanted to, so I just said, no, I'm not doing this. Somebody said, how do I hedge if I don't play puts? Listen, I'm out of a contract before it gets to that point to where I need to hedge. I'm very quick with losses. I have very tight stop losses. I have very I don't really let contracts get to a point. Now, again, that's not saying that I've never done it. I am I've made some bad trades. Like, listen, like I've had trades go against me, and I've stuck into a trade where I should not have, and my loss was accelerated, and it was worse than what it should have been. But my goal again is I'm taking, let's say I'm taking $100 if I can take $100. I'm taking. Somebody said I feel dirty playing puts. I'm betting for a company and their employees to fail. It's funny because I just I'm so like pro long. Like I am like stocks are going to go up. Like calls are going to go up. Like I'm like expecting that stock to go up. I don't want to mess with like the mojo by playing the other side. Again, I'm completely joking, but like that's just like my way of thinking. Like I am I'm a stock is going to go up guy, and I don't want to mess with that saying like, listen, like, no, I don't believe in you stock. You're going to go down. Like I just like that's I don't know. Like my my way of thinking is just like a joke I have, but I play along. I like to play calls. So I'm not really concerned about hedging positions. I'm more concerned with I play weekly options. I have so for example, real quick, we're gonna end right here. We're almost done. We got a couple more minutes before Mitch comes on. I like to play weekly options. Weekly options are only on certain stocks. If you look at like MVIS, for example, MVIS only has monthly contracts. Monthly contracts expire on the third Friday of every month. Not every stock has a weekly contract. SPY has a ton. They've got Monday, Wednesday, Friday. Tesla's got a ton. They've got weekly contracts as well. Weekly contracts, 1, decay rapidly. 2, they're more volatile. And 3, they can really go against you or for you like that. So in order to play weeklies, like your goal with that is to scalp. I'm entering a contract at 9:45, 10 o'clock in the morning, and then I'm out at like 11. And then I don't enter another contract until 3, and then I'm out at like 3:45. I'm not really holding a lot of weekly contracts overnight. If I have a weekly contract that I hold overnight, normally I've already taken some profit out. Like if I bought 10 contracts, I'll sell 7 and I'll hold 3 overnight because I expect something to happen in the morning. But you also have to remember too, like with a weekly contract, you are fighting against the theta that is rapidly accelerating as you are closer to your expiration. So I play, like, for example, I play the week of contracts. Like SPY, for example, is one of my favorite stocks to play. I know you might not like it. I do. I'm familiar with it. I know how it reacts. I'm very comfortable with it. I play the Friday expiration contracts almost all week long. I am fighting against theta every single moment I'm in that contract. So I have to, like with my goal, I adjusted my strategy to understand that Tesla or nothing. I have adjusted my strategy to recognize that I am accumulating 10, 20, 30% in profit multiple times, instead of holding for that home run, I'm trying to just get on base. Like I use that I use that strategy of baseball players because that's what works for me. I like to be engaged in a trade. Like I can't just put a contract in my portfolio and then just sit back and go. Like I like to be involved. Like I like to be trading. And again, that gets me into trouble because I overtrade or I cut losses too quick and then the stock bounces off the bottom support and it skyrockets and I end up, losing money because I sold for a loss when in reality it actually went up. But that's just, again, that's my strategy. That's what works for me. I get so angry when I see red that to a certain extent it helps me because I'm cutting my losses pretty quickly. Like I'm not involved in stocks that are going really, really low and it's draining my account to zero. That does not that does. Somebody said, how about some long calls on Amazon with rumor of a split like Tesla did last year? Fun. That's a great example of showing you what might be a good call to make. However, and I'll stop right here because I just saw AB pop in. Amazon premiums, you are going to have to shell out a lot of money. And if you play way out of the money Amazon premiums, go look at the delta and see how little that contract is going to move for a lot of money that you're going to have to put up in advance. So, AB?
What was that? Sorry, Brad.
I'm good. You want to take it over?
Oh, I mean, you got another minute or two. I was just hopping in to kind of start the wrap up process.
Start the
We don't
wrap
have
up
to right this second.
Okay. Somebody said, how far out of the money do you go, or do you scalp at the money? I'm normally pretty close to at the money. With scalping, like if you are taking the if you are wanting to approach options trading from that perspective, you need to have some gas underneath that contract. It's going to move. Like you need to be able to get in and out quickly. So I'm at the money, maybe 2 strikes down out of the money, but I'm pretty close to being right at an in the money call. I don't go too far into the money, depending on what the underlying stock is. SPY, you can go pretty far into the money. You can go a couple of strikes in and still, make it worth your while. But like for Tesla, for example, your range is a little bit farther because Tesla's moving so quickly. Like you can go 10 spots down, 5 spots down on a Tesla call, or a put if you're weird and you play Tesla puts. You can go a little farther out because the movement of the stock is going to bring a lot more of those contracts in. This all just comes with understanding what stocks you're playing. Tesla, SPY, triple Qs, things like that. Those are the ones that are moving a lot. You have to remember that if you're trying to scalp options, again, if you're trying to day trade options, you need to be involved in a stock that is going to move. You don't want to play some penny stock that's got way far out of the money calls that might hit in like 35 days. These things aren't moving. And a way that you can tell if the stock is going to be volatile, if it's going to be moving, look at spread of the option contracts. If it's real close, that means there's a lot of action. If you've got a 10-cent spread between the bid and the ask, don't even worry about getting involved with that because you're going to have a tough time being able to get out of that stock, and you're going to have very little action on it if you're trying to scalp. Somebody said large caps. Exactly. You want to play the large caps. You want to play the big boys. Not to say that I don't ever play the lower price stocks, the NNDMs. That's one of my favorite all-time stocks. However, I'm not approaching an NNDM with the mindset of I'm scalping this. I'm approaching this that I'm playing it far way expiration, 2-3 months away, and I'm just putting it in my portfolio and letting it sit. Liquidity. Yes, somebody said liquidity. Somebody said, what's a good spread amount? For Tesla, for example, now it looks a little different because we're after hours. So you're going to get Tesla within a couple of pennies. You're going to be able to get your contracts filled pretty close to a bid and an ask. You don't want to get over 5-10 cents because if you are at a 30-cent, 40-cent bid ask and you get filled at 40 cents, you're automatically down $10 plus your commission fees as well. You don't want to get involved in that too much.
Yeah, I think we're good. So where can our folks find you, Brad?
Yeah, so I am on social media and my website, tradinggrounds.live. Trading Grounds, all one word, .live.
Boom. Link
And
is
then
in the chat.
from that, oh, cool. Yep, there's the link right there. So from that, then you can access all of my resources, Facebook, Twitter. I'm big on TradingView. I publish all my charts through TradingView. You can follow me on there. And then I also am involved in a large Discord community called In the Money Trading, ITM Trading. There's a link on my website for our Discord page. We are a free community. We don't charge for anything. You are welcome to join us. You can come and trade with us. We have about 600 and some odd members. But we're just here to to help you grow as a trader. We're not a subscription service. We're not an alert service or anything like that. We are just a community of people that are trying to make people better traders. So.
All right. Well, we do have Money Mitch coming on now. So I don't know if you're going to hang around, Brad, but I'm going to go over there, watch some Money Mitch. Guys, if you like, learning some options with Brad, smash the like, subscribe to the channel if you haven't already. And we'll be back next Thursday for more options with Brad.
See you guys. Thanks for all the support. Appreciate it. Great time tonight.